I'm Cindy Collier, and I've been with Nacva for many years and have had like Greg, I've had the honor and privilege of serving on a number of committees, including the litigation committee, the standards board, a number of different committees. And I uh, Today I'm here to speak for the Standards Board and talk a little bit about why standards are important to the valuation and financial forensics profession. Greg, I can't see here, but is the video working okay?
Everything, we're on your why standards matter to the valuation and financial forensics slide.
Okay, perfect.
You certainly look like you're broadcasting properly on my screen, so I think you're good to go.
Okay, great. Thanks so much. So, everyone providing or using business valuation services should be aware of the professional standards. The days when there were virtually no generally accepted valuation standards and almost anything could pass as a business valuation are gone forever. Owners, investors, attorneys, government agencies, and the courts all demand that business valuation work live up to higher standards. Both the standards and the credentials are evolving. For years, there's been much discussion by regulators, valuators, and the users of valuation services regarding the fragmentation of the industry. The lack of transparency, inconsistent application of methodologies, and the different valuation standards of the various credentialing and standard setting organizations. Professional standards promulgated by authoritative bodies are inherently technical and focused on the need for specific guidance to a precise discipline of expertise. Different professional organizations have varying and distinctive needs for technical guidance. Consequently, they develop specific standards commensurate with their requirements. As a result, professional standards promulgated by different business appraisal organizations will necessarily contain different rules. Similar standards often contain subtle differences, and it's therefore difficult to precisely compare specific standards among the professional associations. To assist in these efforts, the NACVA developed the NACVA Business Valuation Appraisal Standards Comparison Chart, which is found on the NACVA website in the standards section. And this was created to provide a general reference tool for the valuation community involved in business appraisals. It's not intended to suggest precision in the classification of the professional standards. The NACVA Business Valuation Appraisal Standards Comparison Chart provides a comparison of the respective business valuation standards promulgated by various valuation associations, including the NACVA, the Institute of Business Appraisers, IBA, the Uniform Standards of Professional Appraisal Practice, USPAP, the American Society of Appraisers, ASA, and the American Institute of Certified Public Accountants Statement on Standards for Valuation Services, the AICPA SSVS. Each set of standards is formatted differently and to a certain extent generally has more in common with one another than there are differences. The NACVA Business Valuation Appraisal Standards Comparison Chart identifies references to information provided in the various professional organization standards, guidance, and other treatises, and is not a substitute for the user's thorough review, interpretation, and application of the respective documents. However, this chart provides a helpful tool in understanding the various valuation standards and their relationship to each other. The NACVA has also developed an international business valuation appraisal standards comparison chart. So why were professional standards issued? Well, there are a variety of purposes. Valuations of businesses, business ownership interests, securities, and intangible assets may be performed for many reasons, including transactions, litigation, compliance, and planning. So, more specifically, in terms of transactions or potential transactions, They may be prepared for acquisitions, mergers, leverage buyouts, initial public offerings, employee stock ownership plans, and other share-based plans, partner and shareholder buy-ins or buyouts, and stock redemptions. In terms of litigation or pending litigation, they may be prepared for matters such as marital dissolution, bankruptcy, contractual disputes, owner disputes, dissenting shareholder and minority ownership oppression cases, and employment and intellectual property disputes. With compliance, they may be prepared for financial reporting purposes or for tax matters such as corporate reorganization, S Corp conversions, income, estate, and gift tax compliance, purchase price allocations, and charitable contributions. With respect to planning, they may be prepared for planning in terms of income tax, estate tax, gift tax, mergers and acquisitions, and personal financial planning. In recent years, the need for business valuation has increased significantly. Performing an engagement to estimate value involves special knowledge and skill. The business valuation standards were written to improve the consistency and quality of practice among business valuation professionals. Members of the various valuation organizations are required to follow the standards associated with their credentials when they perform valuation engagements to estimate values that culminate in the expression of the conclusion of value or a calculated value. And exceptions such as the litigation exception are described in the standards. So recently, the AICPA promulgated the AICPA Statement on Standards for Forensic Services #1. And these new standards apply to new engagements accepted on or after January 1st, 2020, with an early adoption permitted. The Statement on Standards for Forensic Services #1, known as SSFS1, provides an authoritative guidance for AICPA members providing litigation and investigative services. Specifically, the standards clarify the definitions of litigation and investigation for accounting purposes, define key considerations for client and provider relationships, and establish boundaries on the services members can provide. The new forensic standards are the first time that the AICPA has codified best practices for litigation and investigative consulting work according to the AICPA Forensic and Valuation Services Executive Committee. Forensic accounting is a diverse practice, and this standard is unique because it's applied based on why a service is provided, whether litigation or investigation, rather than what skill set is employed. And under SSFS1, forensic services provided under investigation or litigation are defined. Investigation is defined as a service performed in response to concerns of wrongdoing in which the member is engaged to perform procedures, collect, analyze, evaluate, or interpret certain evidential manner to assist the stakeholders, for example, the client, board of directors, independent auditor, or regulator, in reaching a conclusion on the merits of the concerns. On the other hand, litigation is defined as an actual or potential legal or regulatory proceeding before a trier of fact or regulatory body, such as an expert witness, consultant, neutral, mediator, or arbitrator, in connection with the resolution of disputes between the parties. The term litigation is used herein it's not limited to formal litigation, but includes disputes and other forms of alternative dispute resolution. The standard also includes prohibitions on opining on the occurrence of fraud and performing certain forensic services for a contingent fee. In addition, it provides more tailored, authoritative guidance to AICPA members who perform these forensic services. SSFS1 currently applies to all AICPA members, AICPA member firms, and employees of AICPA member firms. Other organizations have offered guidance on business valuation issues, including the Internal Revenue Service. Congress directs the U.S. Treasury to issue legislative and interpretive regulations to provide structure for the laws it passes. Interpretive regulations, for example, revenue rulings, do not have the force of law, but present the position of the Internal Revenue Service on various tax matters, including the valuation of businesses, business interests, and related intangible assets. Regulations are actually formulated by the IRS, but they are approved by the Secretary of the Treasury. For example, the regulations for Chapter 14 of the estate and gift tax laws require appraisers to use special valuation methodology in certain circumstances with regard to family-owned businesses. The IRS also issues pronouncements representing administrative as opposed to legislative tax authority. And such pronouncements include revenue rulings, revenue procedures, private letter rulings, PLRs, technical advice memorandums, TAMs, and general counsel memorandums. These pronouncements illustrate the treatment of certain issues not clearly addressed in the regulations. Over time, many of the positions espoused by the IRS, the regulations, and revenue rulings are addressed in court disputes. Resolution of these issues by the courts establishes case law precedent, but by no means has all of the case law been supportive of the positions taken in the regulations and revenue rulings. Representing less authority than the revenue rulings, the PLRs, TAMs, and general counsel memorandums issued by the IRS are responses to the specific inquiries from taxpayers and may not be cited as precedent. However, these can be helpful understanding the IRS likely position on emerging issues for tax-related appraisals. The IRS internal publications and other materials, such as the IRS Valuation Training for Appeals Officers publication available online, also provide useful insights. In addition, the IRS has issued business valuation guidelines that are similar to the business valuation standards found in USPAP. Revenue rulings and other IRS pronouncements are often cited for valuation guidance for purposes other than taxes. However, valuation methods may differ for different purposes, and aspects of the revenue rulings may not be appropriate for non-tax purposes. So it's important that the professional standards for valuation services are often considered by the courts. Most business valuations that are performed have the potential for legal challenge. Courts like to have professionally accepted standards to rely on for guidance deciding disputed issues. Courts may suspect poor appraisal work, but it helps them tremendously to be able to cite authority for the rejection of work that fails to meet professional standards. Many valuation analysts have brought the authority of the standards and other professional guidance to bear very fruitfully in court on numerous occasions. The development of the standards and other professional guidance has contributed to consensus and consistency in the resolution of business valuation issues, both in the courts and elsewhere. There are numerous references and reported decisions quoting testimony that ultimately assisted the court in reaching its decision. Many valuation analysts believe this has contributed to the consistency of judicial decisions. The standards and other guidance continue to build consensus and consistency on valuation issues. As these materials are more widely disseminated and recognized, undoubtedly they will significantly impact court decisions in the future. As far as the international acceptance of US standards and practices, we know that the United States is by far the world leader in both markets for an analysis of securities, companies, and business interests. This is true for both publicly traded securities and closely held businesses and business interests. Two factors have combined to accelerate the spread of US technology and financial appraisals and markets throughout the world. The first being the rapidly increasing international flow of capital. The second, the growing privatization of formerly socially owned businesses in almost every country in the world. The standards and guidance are becoming increasingly applicable to international as well as domestic transactions as the world financial markets become more homogeneous. Several governments have adopted USPAP business valuation standards as mandatory criteria for business valuations or transactions involving privatization. The international valuation standards contain business valuation standards that closely follow USPAP. So, in conclusion, the business valuation practitioners are becoming more knowledgeable and rigorous in their practice all the time. The standards provide attorneys, CPA business owners, courts, and others who rely on business appraisal some widely accepted criteria by which to judge the quality of business valuation. The standards continue to undergo refinement, but a solid foundation is in place. And the accreditation in business valuation is also achieving increased recognition both in the courts and in written opinions by the legal community and in selecting business valuation experts. So I just wanted to provide a brief introduction to the importance of the standards to the valuation and financial forensics profession. And I hope that you all will review the standards, which are provided on the NACVA website that we have discussed today, and help us continue to improve their usefulness and relevance to the profession. Thank you.